Most financial advisors are putting 2 to 5% of their portfolio into crypto. They just want to make sure they're exposed if crypto becomes more important in the next 5 years. So I think the biggest reason they want additional assets is just diversification. But there's also an element of these smaller assets like Solana that have significant momentum. So there's some that want to speculate on those individual assets. But I think the big play for institutions, family offices, and financial advisors is actually just owning the field, owning Bitcoin, owning Ethereum, eventually owning other assets, maybe owning crypto equities. They want to do the same thing they do in stocks and bonds, which is diversify and own the asset class.
With the recent approval of several spot Ethereum exchange-traded funds by the US Securities and Exchange on Monday, and their subsequent launch on Tuesday, expectations are climbing about the mainstream adoption of digital assets and what lies ahead for the space and individual cryptocurrencies like Bitcoin, Ethereum, and Solana. According to Bitwise CIO Matt Hougan, we are currently witnessing a most historic moment, which he believes will herald the final and full acceptance of the entire space in the traditional finance sector. Social media posts from Bloomberg ETF analysts James Seifert and Eric Balchunas reveal that the newly approved ETFs did a little over $1 billion in total volume, about 23% of what the spot Bitcoin ETFs did on their first day of trading. BlackRock's ETH did 25% of IBIT's first-day trading volume, and the gap between Grayscale's converted Ethereum trust, ETH, and the newborn 8, the other approved spot Ethereum ETFs, was about $625 million, which Balchunas describes as a healthy, sizable chunk, which should convert into inflows. In a recent interview with Bloomberg Television, Hougan comments on the successful launch of the spot Ethereum ETFs, describing them as probably the most second successful ETF launch after the spot Bitcoin ETFs launched earlier this year. According to the Bitwise CEO, both the Bitcoin and Ethereum ETFs have been vastly successful, proof of the insatiable appetite of mainstream institutional investors for cryptocurrencies. Before the approval of the Bitcoin ETFs, there was much speculation about how institutional investors would receive them. Even at their most bullish, many people suggested that institutions would only put in 1 to 2% of their portfolio into cryptocurrency-based ETFs. However, the reality has been overwhelmingly successful, especially for the spot Bitcoin ETFs, which have surpassed all expectations in 6 short months. Hougan expects the same thing with the Ethereum ETFs in the coming weeks and months, and predicts that the success will contribute to significantly higher prices for Ethereum. As we bring you clips from the interview, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
Yeah, it's been an incredible reaction, to be honest. It's exceeded my expectations. Through lunchtime, we had about $500 million traded in these new ETFs. By comparison, the average ETF trades about $1 million on its launch day. So it's shaping up to be the second most successful ETF launch of all time, after, of course, the Bitcoin ETFs. And we expect to see strong flows into ETHW, the Bitwise Ethereum ETF, when we close out later today.
Does this mean you can turn faster into more crypto assets for a spot ETF?
First thing I would say is there are still unlocks to go, even for Bitcoin ETFs and Ethereum ETFs, just because they're approved and many people can buy them. Some of the largest wealth management platforms in the world, folks like Morgan Stanley and Merrill Lynch and others, are still working through the due diligence. So there's big steps to go forward just for those two assets. Long term, as we look into 2025, we've entered the ETF era of crypto. We're going to see ETFs on multiple crypto assets. We're going to see index-based ETFs. You've already seen firms filing for Solana ETFs. The thing we've learned from the Bitcoin and Ethereum ETF launches is that ETFs work in this asset class. They lower costs, they raise protections, and investors want them. I think we'll see a wide array in the next year or two. Bitwise, I can only speak for Bitwise. We've been working with the financial advisor and family office audience for years, and we're seeing a very strong reception. You know, we have $2.7 billion in our Bitcoin ETF. We're seeing strong trading volume in ETHW. Part of that is because we've been educating this audience for years. So I think the real answer is just education. It takes a little bit longer for these audiences to move into these ETFs than it does for retail investors. But every indication I see tells me they're coming. I'll just share later today, we're doing a webinar with 100 financial advisors and family offices representing billions of dollars of assets to talk about ETHW and Ethereum. We're going to be doing that every day. Eventually, that's going to pay off in billions of dollars in flows.
Hey, Matt, why do you think we see if Ether lower today on a day when these spot Ether ETFs start to trade, and yesterday even lower when we got the news from the SEC?
Yeah, I think I'd point back to what happened after Bitcoin. We remember the Bitcoin ETF launch as a huge success, but we've blocked from our mind that Bitcoin traded from $50 to $40,000 before it recovered and ripped up to $72,000. There's an element of sell the news. There's an element of mixed expectations. But I'll say this, I'm enough positively surprised by the level of volume we're seeing in these ETFs out the gate that I think the sell the news fact may be shorter termed in Ethereum than it was even in Bitcoin.
Is Solana the next wave, or is there something else?
Yeah, I really think it's Bitcoin and Ethereum. Remember, these are 70% of the market. They're the two biggest applications in crypto. Bitcoin as a monetary asset, ETH as the leading technology platform. If you own those, you own the largest winners in crypto. And I think most people are going to own those probably at a 2-to-1 ratio, 2 Bitcoin to 1 ETH on a proportional basis. After that, I do find investors are very interested in Solana. They're very interested in alpha strategies. They're very interested in DeFi. There's a long tail, but most of the interest is going to be in Bitcoin and ETH, at least for the next year. And I think that's a great starting point.
Before the SEC's approval of the spot Ethereum ETFs, Hougan predicted that new crypto-based ETFs could draw in approximately $15 billion in net inflows within the first 18 months, and even more over the coming years. The Bitwise CEO expects both the Bitcoin and Ethereum spot ETFs to follow a similar pattern as Goldie ETFs, which attracted about $1.5 billion in their first year, $3.3 billion in the second year, and $19.3 billion in their sixth. The Bitcoin ETFs have already surpassed $16 billion in 6 months. Hougan expects them to hit $100 billion by the end of 2025, and go even higher in succeeding years. In addition, he expects the SEC to approve other cryptocurrency-based ETFs, probably starting with Solana, in 2025. Bloomberg's Eric Balchunas also recently appeared for an interview on Bankless to discuss the spot Ethereum ETFs and what to look forward to in terms of trading volume, inflows, and price action for the leading altcoin. Here are some clips from the discussion.
A solid A, maybe not an A plus. I'd say our prediction was that these things would take or do about 20% of what the spot Bitcoin ETFs did, and they did 23%. So, but it could have been worse. They could, the big thing that was in the back of my mind the whole time was the ETH futures ETFs. If you remember, really flopped. I mean, they were almost like an embarrassment. Like nobody cared. And the Bitcoin futures ETF did really well. Now, granted, the ETH futures launched post SBF in the dark times, whereas the Bitcoin futures launched in like the 69,000 peak of 2021. But still, I would say anybody who's an Ether person should be really happy with this. This is solid. 20% may seem like, well, okay, I'm a little jealous, but the Bitcoin ETFs was the biggest launch ever, and beyond normalcy, like almost like an anomaly in physics. So it'd be like saying, hey, would you like 20% of Bill Gates's net worth? And you'd be like, hell yeah. Like I would lock into that, right? That's how big the Bitcoin ETFs were. Compared to a normal launch, I mean, these blow everybody away. So like, for example, even the one that did the least good, which was 21 shares, had 8 million in trading. That's more than 90% of new ETF volume on day one. So even the last one blew away the norm. So, it all went well. There was no hiccups, no weird pricing or nothing that I saw. So, I think it went really well, smoothly and solid. 1 billion or one spot 083. So just shy of 1.1 billion. And notable is that all of them saw double over 10 million except for 21 shares. That's good. Like there's a strong middle class here. It wasn't like BlackRock did like almost everything and then everybody else was like starving. They all did pretty well. It was a nice cascade from like Grayscale to BlackRock to Fidelity down to 21 shares. The one thing also to note is that the Grayscale ETH ETF, which was is probably going to be like an unlock, sort of like GBTC,
Right.
that has $450 million of trading. That's probably mostly outflows. Good news is it's well overwhelmed by the inflows of the other guys. So you have 600 and something million net. The other guys did over ETH, which that's probably going to, at some point, it's a good chunk of that's going to be inflows. So look for some decent chunky inflows over the next couple of days.
And why are trading volumes so important?
Most investors and traders and institutions, anybody of any size, even retail, they just like to see some volume. It's like you don't want to buy something that never trades. It's like the spreads are wider. You don't want to be the only person at a party. So volume's just good to get like something going, a little mojo. They also lower the spread. So the price of going in and out is lowered by the more people that trade it, the more market makers are making markets in it. And so you have a tight spread. And then you have a, over time, the volume is big fish bait. The more volume, if these ETFs, this couple of them can start trading, $300-400 million a day, there's going to be bigger and bigger fish that are like, well, I think I could go in there. Nobody would notice. Big investors like to put on positions and not have anybody know they're there. And if they become too much of the volume, they don't like that. So the more volume you have, the more chance you have of catching a big fish. So that's why it's important. And on day one, again, ETH is unusual, ETHE, but mostly the volume is new people buying. So it's a signal of inflows, like a leading indicator. So those would be the reasons that we really look for volume. As I said earlier, and I always say that the two most important ingredients for an ETF category to grow are low fees and high volume. And these already have a lot on day one. They got the low fees, obviously, and then here comes the volume. You're in good shape. Then there's no reason outside of just not being into Ether to buy them, not buy them. It just removes all the possible hurdles to purchasing them. Like, I'm into it, but it's too expensive. Or I'm into it, it's cheap enough, but I don't know, it's just not enough liquidity. You eliminate all that. Or I'm into it, but there's no big brand names. So again, you check all the boxes.
Gone are arguments about how well issuers like BlackRock will be able to sell Ethereum ETFs to traditional investors who have no knowledge of the cryptocurrency industry. With Tuesday's figures, BlackRock's ETH recorded over $258 million in trading volume, followed by Fidelity's FETH with $137.9 million. One could say they are doing just fine selling the Ethereum ETFs to all categories of investors. As Hougan stated, there is clearly a market for these products, and we should continue to see these massive figures and some effect on Ethereum's price in the coming weeks and months. Please share your thoughts on Matt Hougan's and Eric Balchunas' predictions for Ethereum and spot Ethereum ETFs, as well as your own predictions for the leading altcoin, in the comments section below. If you like this video, don't forget to give it a thumbs up, subscribe to the channel, and check out our other videos featuring important insights and analysis from some of the industry's brightest minds. We also urge you to check out our free newsletter, where we share free market analysis and lots of important market trends you do not wish to miss. Thanks for the support, and see you in the next one.